Welcome, G-Traders. The publication of the US labor market figures once again confused investors. As you have noticed recently, the key indicators of the first global economy have been exceeding forecasts. Thus, the non-farm payrolls for December also surprised the traders. On a Friday, the data affected the US dollar, and today we see how the Japanese yen and other antibodies are reacting to the of offer events. According to the report, the number of new jobs increased by 216,000. For comparison, in November, the indicator's reading was downwardly revised to 273,000 from 199. By the way, average hourly earnings unexpectedly surged by 4.1%. The situation was also fueled by controversial statements provided by Federal Reserve officials. Thus, Thomas Barkin, head of the Richmond Fed, is assured that the country's economy is on the way toward a soft landing. He also mentioned on Friday that the issue of the key rate hike is still on the agenda. On Saturday, his colleague, Federal Reserve Bank of Dallas President Logan, warned that the regulator might raise the benchmark rate. Inflation today is in a much better place than last January, but the job of restoring price stability is not yet complete, the president said. The fact is that a 4.1% rise in earnings is far from the target of 2% and may cause a new jump in prices. The full market's attention was shifted to the inflation reports from the United States, which will be released later this week, namely on Thursday and Friday. In addition, some other reports were also issued after US non-farm payrolls on a Friday. They showed that the US services sector slowed significantly in December, whereas the employment rate fell to the lowest value in 3.5 years. On a Friday, the US dollar declined below 102 points amid contradictory reports against the basket of six major currencies. Then its price recovered to the range of 102.30 and 102.50 points. On a Monday, during the Asian trade, the currency was trading in the same narrow range. The yield of treasuries is also showing a bullish trend like the US currency. Nevertheless, technical indicators are pointing to a possible strengthening of the bearish trend in the greenback in the short term. If the number of sell orders increases, the US dollar index may gain slight to such support levels as 102.10 or even 101.80 points. The nearest key resistance is around 103 points. While the US dollar is waiting for fresh macroeconomic data that may shape its direction, the yen approached the limit near 144.50. Last week, the greenback managed to gain in value against the yen by 2.6%. However, it opened the trading session on a Monday with a decline. The yen even managed to test the level of 144.15. Today, markets are closed in Japan because of the weekend. Nevertheless, the yen opened the week with a high volatility. During the Asian trade, the dollar-yen pair was trading with a decline within the range of 144.00 and 144.90. In the case of the bearish scenario, the pair may test the key support level of 144 yen. The nearest resistance level is located near 145 yen per US dollar. As we can see, the Australian dollar and the New Zealand dollar failed to benefit from the decline in the greenback. Traders remain cautious amid the expectations of a more accurate data on the US prices. That's why the Australian dollar opened the new week in the bearish channel of 0.6680 and 0.6740. Early on Monday, its price tumbled below the critical level of 67 cents. After breakout of the important psychological level, the Australian dollar may test $0.6650 once again. The nearest resistance level is seen at 0.6740. Notably, recent reports on the Australian economy have shown a decline in business activity in both the service and manufacturing sectors. The data also highlighted the vulnerability of the Australian dollar to the greenback. In addition, China, the main trading partner of the antibodies, issued negative news. One of the largest investment funds, Zhongzhi Enterprise Group, has filed for bankruptcy as its debt obligations have grown to staggering $64 billion. And this may indicate that the debt crisis is the real estate market has also spread to the financial sector. A drop in the Chinese market is an alarming signal not only for Asian and ocean countries. While the economies of China's largest trade partners, namely the Eurozone and the United States, remain resilient, New Zealand is suffering a lot. That's why the New Zealand dollar became totally dependent on the greenback. On a Monday during the Asian trade, the Kiwi dollar pair was falling within the range of 0.6210 and 0.6260. Since the technical indicators are pointing to the continuation of the bearish trend, the New Zealand dollar may drop from the current level of 0.6230 to the support of 62 cents. The currency may face resistance at the level of 63 cents and near $0.6380. Notably, the vulnerability of the New Zealand dollar could be short-lived. And the fact is that on Tuesday, New Zealand will disclose building permits figures. What's more, data on China's price indexes, which is slated for release on a Friday, may also support the New Zealand dollar. And this is how trading in the Asia-Pacific region was held today on January 8. However, the market situation is constantly changing. News about stock exchange trading is released in a real-time mode, which InstaForex reviews regularly to stay abreast of recent news. We wish you a successful start to the trading week. Do not hesitate to leave your comments and questions, and see you next video.